Most people are completely missing where the money is going in AI. Hello, I'm Lynn, and this is Lynn's 10-Minute Alpha, your 10-minute edge in finding the biggest opportunities. A stock just went up more than 1,800% in 5 trading days. Not a meme coin, not a shell company, a real listed venture fund, and people are buying it because they think it gives them exposure to SpaceX, OpenAI, Anthropic, and other elite private tech companies before most of them fully hit public markets. That sounds amazing. But what if this is not the opportunity people think it is? What if this is actually one of the most dangerous trades in the market right now? Today, I want to break this down in 3 parts: what this fund actually is, why it exploded, and whether buying it now makes any sense at all. This is not financial advice. This is my interpretation of public information. Please do your own research. Now let's get into it. Why are people so obsessed with this stock? Because it sells a dream. The dream is simple. What if normal investors could finally buy the kinds of private tech companies that used to be available only to elite venture capital firms? That is the emotional hook. Not just money, access, not just returns, status, and most of all, relief from FOMO. That's the real fuel here. People watched NVIDIA run. They watched private AI valuations soar. They watched big money get into the best names early. And now this fund looks like a shortcut, not just a stock, a ticket. Now let's look at what happened. According to the script, the fund had around $650 million in net asset value, yet the stock surged 317% on day one, another 64% on day two, and more than 1,800% in 5 trading days. That is not normal price discovery. That is emotion. And this is where people get trapped. They think if the assets are amazing, the stock must still be worth buying. No, that is not how markets work. A great asset can still be a terrible investment if the price is insane. And in this case, the market was pricing the fund at roughly 16 times net asset value. That is the key number: 16 times. If the basket is worth $1 and you pay $16, you are not buying value, you are buying excitement. Now, here's the biggest trap. Most people think they are buying early. They are not. They are buying after the future has already been priced in. That is the whole danger. Let's say the best case scenario happens. The private portfolio doubles. SpaceX does great. OpenAI does great. Anthropic does great. Sounds incredible. But even then, if you paid 16 times NAV, you can still get crushed. That's because the stock price already assumed perfection. You're not buying before the dream. You're buying after the dream has already been marked up. This is not trading like a fund. It is trading like a story. And stories are dangerous in markets because stories are easy to love, easy to repeat, easy to chase. But eventually, price meets reality. And when it does, the crash can be violent. That is what happens when investors stop asking, what are the assets worth? And start asking, what if I miss out? Now, to be fair, the product itself is interesting. There is real value in giving ordinary investors some exposure to private companies that used to be inaccessible. That part matters. But access is not the same thing as value. Innovation is not the same thing as a good price. And that distinction is where most investors get hurt. So here's the real takeaway: never confuse a great story with a great investment. Never confuse access with value, and never assume that because the names inside a fund are world class, the price outside must make sense. Sometimes the most dangerous trades are built around the best stories. So let me ask you one question. If a fund is worth $1 and the market asks you to pay 16, are you investing or gambling? Comment below. Would you buy this here or stay away? If you want to stay ahead of where the money's going, like and subscribe. More alpha coming.